Good morning, everybody. Happy Friday. Welcome back to the Daily Profit Plan just after 9 o'clock on the 23rd. Let's have a look at everything this morning. How's everybody's day yesterday? Markets. Mostly unchanged for the day. Red positive because of the gap. But we basically finished flat. We had an open around 14. We had a close around 13.36. That worked out pretty well for our daily profit play trade yesterday when my pin price was the 15 area. So that was nice. I was pleasantly surprised to see it settle right back to 14 for the day. It wasn't a huge surprise. We will probably see lots of these days in 2026. Um, that's by no means saying that's the strategy, but it just wouldn't surprise me that a lot of break-even days, a lot of break-even weeks, a lot of break-even months. That is also why I have engineered options as one of our really solid strategies with reward to risk. Playing these intraday and 0-day environments. We had a pretty good play yesterday. And look, I didn't get a trade in the morning like I wanted to. My typical daily profit play above and below never got filled. But as the kind of morning progressed and we were right back to break even, I just thought, well, we had a wild and rocky week already with Tuesday and Wednesday being high volatility plus moving past the expected move. So what are the chances that we, not necessarily close right at the opening price, but we just linger around that 69.15 handle all day or several times throughout the day? That was the setup for yesterday's trade. So the max risk on the trade yesterday for daily profit was $230, and we closed out. I had two contracts in that trade. So one closed out for 10.50, so it's a $220 winner, and then another one closed out at 9.95, which is just over $300. Actually, no, just under $300. So all good. I'm overall pretty happy with that. And then it cash settled coming back to close at 69.13. It would have cash settled around 500 and some dollars profit if you let it go all the way. But late in the day, this would have been what was that? 3:35 p.m. So in the final 30 minutes of trading, what was a full loser had I took the profit here as we were getting back to that 16.15, 16.13, 16.16 area. By the time we were down here late in the day at 6,900, my trade was, basically showing a full loss. And then it closed back up with a nice little rally into the close to get right back where we started or pretty close to it within a point. So anyway, interesting day. And today is a new day. Why change the DPP exit price? I didn't, Bill. I put both of them in there because I had two contracts. So I had two exit prices, but the initial trade from start to finish was a 12.70 credit to a 10.50 close. I had a 9.95 with a second contract. So as far as the official trade, it was a 12.70 to 10.50. Okay. What's up, Melinda? Hey, Jeff. Wade, good morning. Arthur, good morning. Stephanie, Mark, Don, good morning. Vladdy says was cautious yesterday, closed early, $12 debit, still win. Good. Still a win. That's fine. Nice. Greg says win for $800. Excellent. All right. Hey, Catherine. Hey, William. Hey, Alan. All right. Chat is open for everyone. Good stuff. Good stuff. Hey, Cindy. Let's see here. Futures market down about 0.22%, looking at a softer opening. Gamma level wise, you can see it's pretty wide today. If I'm doing, call spreads and put spreads, I would say put spreads to be a little bit safer. I don't want to be down here towards 68.30 with this inefficiency. If we're opening a little bit softer, as long as we have prices supported off of 68.90, that would maintain a positive gamma day. There's obviously a gap fill here as well. So just be prepared for some noise. This gap fill or this inefficiency could be tested. Opening softer with futures could push us down to 68.90. Do we hit here and then rally? Negative gamma, positive gamma. The positive gamma is a little bit stronger. So you're going to want to see price, hold some support today at 68.90 to give these levels a chance. We're going to go there directionally. Pre-market plus minus, let's take a look at that. Today is the 23rd. I'm actually going to log back in my broker platform. I was working on some stuff last night, didn't shut my computer down. So let me refresh so I can get the proper options chain. Nice, Chuck. Blue Bunny commercial. You'll have to share the link that if the thing goes live. You'll have to share it with us. That's pretty cool. All right, logging back into Tasty. Larry 3238, that's the pre-market plus minus. All right, take a look at that. So Friday, 3238. All right, let's go SPX. There we go. Okay, 3238 pre-market. We're gonna have a little gap lower. Little update for engineered options. Let's see. This one, trying to figure out what this one is here. This is a put spread with a broken wing butterfly. Okay, I just have them. I have them labeled because I had a strike that got overlapped. Engineered monthly. This one is up about $50. XSP trades. We're up 70% of our max credit on engineered options, 60% of max credit on engineered options. That's expiring on Monday. And then our monthly is up about 38%. So we're going to ride out some winners for engineered options, which will be nice as long as we can stay above certain lines in the sand for Monday. And then our expiration is Thursday. I'm sorry, expiration is Friday, end of the month. Next week will be an extremely noisy week. It could be good, it could be bad. I'm not really sure. I think that coming right back up to test, this gap level, seeing how the market did kind of roll over a little bit yesterday. Today will be an interesting close, but next week is obviously a brand new week. Is the market able to, let's say that the market uses this as, I mentioned that kind of rising wedge breakout. We spend all week pulling back. Okay. So next week with FOMC could be just a big indecision candle. And then the market takes its cue into February. One thing I want to look at this morning is going out to February, going out to March. I mean, on the higher time frame, here's a monthly chart for SPX. Okay. Typically in candle cycles, I mean, this low to this high, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's a 10 candle cycle. Now, there's no guarantee like that's the low. But let's go 1, 2, 3, 4, 5, 6, pullback. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, pullback. Right. And it gets within reason. There's like 7 candles to 10 candles, 7 candles to 11 candles. The way that this has been showing some massive indecision here at the top. I would use the option chain to take this trade. I would try to set it up with proper reward to risk where I'm not taking a ton of risk. I want decent probabilities in my favor. But part of me is thinking, I think we'd have a pretty safe trade if we went out into, February, end of February, where the market struggles to make all-time highs. And, the high here is right around 7,000. I think this officially hit like 69.96 for this CFD read versus the SPX was a 69.86 high. But this is like 69, I think 96 or 97. I got a 98 actually on this one. So anyway, I could be wrong, right? Obviously, this could be like, well, there was the taco trade this week and the market's up. But if I'm not incorrect about this rising wedge, this is going to be a difficult high to get through, and the market is still open and vulnerable to a correction down towards 6,600, 6,500. That would be area one. That would be some pretty decent support. Area two, previous resistance becoming support. That's around 62 to 6,100. Both of these I see as really good buying opportunities. Okay. I think there are ways to play, these levels. I think waterfall income would be a great way to trade it. Engineered options, same thing as far as how we structure our trades and timing these. But I'm looking at a couple of maybe some bonus trades where if I don't mind getting, some levels around the 7,000 handle, looking at the option chain, trying to find something that's fairly probable in our favor towards the higher end of the expected move, and then look to get some type of broken wing butterfly or even a really simple bear call spread towards these highs. I tend to like the broken wing butterflies just because we have that bit of a profit trap that will also, kind of increase my margin for error by, 5 or 10 points. I was looking at levels yesterday into like the February expirations. I think we had like a 70-50 area that I'm taking a look at. So I'll review that once we have live prices this morning at 9:30. Okay, Aurora, what's the question here, Larry? Yeah, I did. Let me send you that link, man. We had a long day after the markets closed yesterday. We were out and about. We have a family member. It's my fiance's grandpa that is. He's been diagnosed with dementia in at least some form. So it's pretty progressive. And the next step is he's been in the hospital for the last couple of weeks, and we had to go around, and we are kind of on a time crunch, but we're finding an assisted living place for him, which is not a fun decision, but we did find a really nice facility for him. So we're trying to get everything discharged. That's happening today. So anyway, those all happened yesterday. But I will get that link for you, Larry. I'll send that to email. Do you have time today? You have time today to connect? I should be good after. Okay, I should be good after closing bell if you are. So I'll get you a link this morning. All right, good stuff. Aurora says, can you just leave a bull call spread on expiration if above your short call, or do you have to close them? So bull call spread, so you're bullish, right? What's the instrument you're trading? Typically, if price is above your bull call spread, so if you have a buy call, this would be a +1 for your buy. Then you have above that a sell call. If price is up here above it, if you get to expiration, this should be full profit. This should be full profit. The only time so if it's a stock, if price is in between the strikes, the stock could be assigned potentially because you have, well, I guess it wouldn't be assigned because you're long that call. That happens in a put spread, not a debit spread. But you should be able to leave it alone because you do have the defined risk spread. Now, on rare occasion, maybe like 2 to 3% of the time, let's say that you buy a call, you sell a call, and price is way up here. For some reason, again, this is going to happen very, very infrequently, but the broker might say, well, this trader has a short call at this strike, and you might get assigned short shares. Now, that's no reason to panic, even though you're clearly not trying to be short on that position because you still have the long call as a part of the trade. So if that ever happens from the broker, what you do is you take your negative 100 shares or whatever you have negative share wise or short wise, and then you close out your long put. So you take the shares and the long put and you close it out at the highest possible credit that you can. It should be the same credit that you have in the initial trade. Should be. Because if you're short here, let's just use the example. Let's just say this is Apple, just so we have easy numbers. So if the shares are Apple, so if I do Apple, I buy a 200 call and I sell a 205 call, I pay, $2.25. So that'd be my max risk. And that gives me 275 max profit if we close at $5 credit, which by expiration, if we're above 205, that's going to be our closing trade. So let's say for some reason, here's my 200 buy call, here's my 205 sell call, and price is at 300. Okay. And for whatever reason, the broker's like, this person has a negative or a short call. We're going to assign them here at 205. You're going to get assigned 100 shares short, which means you're down $95 per share, right? But you are long 200 for the equivalent of a one contract option trade, which represents 100 shares. So what you do is you close out your long put and you close out the shares. And so you're down 95 on the short shares. You're up $100 on the long call. And guess what your net profit is? $5. Guess what your max profit was? The $5 credit, which gives you the 275 winner. You're still going to net the same result. Does that make sense? So the same thing happens when you do a put spread. If I did a sell put, buy put, and price is way down here, the broker assigns me. Okay, I obviously this would be for a loss. Like if I did Apple, let's say I sell at the 200. So this would be I sell the 200 put. So that's a 200 put. And then I buy the 195. Let's say Apple drops to 150. Okay. Sometimes in this instance, the broker says, well, this trader has a sell put at $200. We need to assign. So they assign you 100 shares long at $200. Okay. Let's say that on this trade, we collected, $2 credit. Make sense? So they assign me at $200. I'm down $50 on the assignment price, but my hedge is 195 and it's up 45. Right? So I'm up 45, I'm down 50. I still collected $2 initial trade. If I close out my shares, so you close out the shares and you close out your long put, you close it out for 195. Guess what that is? That's the same $3 loss that would have occurred from the initial trade if I wasn't assigned. Does that make sense? So again, here's how you know. This is why defined risk to me is my favorite, because you have a plan that even if the broker assigns you, you know that you have the opposite side of the trade that is properly hedged. Okay, and so that should allow you to get out of even the assignment trade. Even having it like, oh, they broke apart my spread. It was defined risk, and now I'm assigned shares short. I'm assigned shares long. You still have the opposite side of the trade, as long as you're doing this prior to expiration. Okay. So if this were to happen, you can always get out of the trade for the initial risk or the initial profit on the trade. And if this ever happens to anybody, come into sessions and ask me, and I'll walk through it with you. Because I've seen this happen, enough over the years with teaching traders that I see this happen. It happens to me too, but I know what we have to do in our broker platform to get us out with the initial risk or get us out with the profit. But it is not fun when the broker shows that you owe, $50,000. Who remembers the glitch this week on Tasty Trade? I do, because it was, Tuesday or Wednesday. Okay. The broker showed that I had a negative buying power of $101,000. Okay. And for some reason in my broker platform, I did a 20-cent butterfly. So that should have been my main risk. And it said you have insufficient funds. Well, clearly that's not correct. And so that's why I was on the call with the trade desk, and I was, contacting support just to make sure. And when I saw my balance go to negative 101,000, I clearly know that that's not correct. So I'm just trying to make sure that this gets resolved. And as soon as they resolve their issue, all of a sudden I'm back to, profit for the year and, $71,000 of buying power. And I don't know what it was that they had to fix, but it got fixed. So, I know what I trade and I know what my risk and reward is. And the nice thing about trading options is literally with defined risk, the market could go to infinity or to zero, and I know what my reward to risk is. So I really don't sweat like this crazy stuff where all we're trading in options is price and time and volatility. And if you trade with defined risk, you tend to know exactly where price needs to be for you to make money. You know where your risk is at, and you know exactly what your maximum risk is. And that's a good thing. Okay. All right. Do you trade in the afternoons? I mean, I'll trade anything that looks good. Okay. I mean, it's opening to closing bell. If I see a good opportunity, I'll take it. But by Monday, Apple could be at 305, and the long was Friday done at 300. Are you like taking my example to something else, Arthur? I mean, if the assignment happens before expiration, then you can manage the other side of the trade. If the assignment happens because of expiration, that shouldn't be the case if it's not inside your strikes, right? Like if I have a buy call, sell call, and prices up here, there should be no assignment coming into expiration. If it's not assigned early, it's going to, like, if you're trading in the US, they're American options, which means they can be assigned. If you're coming into the day of expiration and it's not assigned, then it's just going to expire for, in this case, a bull call spread would be full profit. If I did a bull put spread where let's see, I sell a put and I buy a put, if price is above that, I'll just keep the profit. If price is below that, there's no assignment. If this is not assigned by expiration, there's no assignment here. Any assignments are typically earlier than expirations. Okay. It can happen prior to expiration. I mean, Liberation Day last year, I got assigned on a bull call debit spread. They assigned me short shares because I started to get, stacking up long expirations, and one of them got assigned. I was like, the hell, man, this is a bull call spread. Like, what are you assigning me for? But the nice part is it was already in profit. I just had to close out the long call with those short shares, and it netted the same amount. Okay. Chuck says on the strike 685, 686 puts, do we need to be in the money? No, those are going to be out of the money, Chuck. Right? Because if you're a 686 or 685 and price is at 691, you're out of the money, which is exactly what you want for that put spread. Okay. So our trades are, in profit, like 60% of max credit, 70% of max credit. By the time we roll into Monday, hopefully they'll be at 100%. We can just let them take the full profit. Okay. Mike says, how do you deal if the underlying moves way up, which is a good thing, but you have more than 50 to 60% left, and now the bid-ask spreads are not worth closing? I mean, what's your trade there, Mike? Capital's now locked. It's like, it's not locked. How big of a trade size you taking there, man? And what's the worst case scenario there? You close it for profit? Put spread, longer dated put ratio. Oh yeah, I mean, depends on what it is. Like, I mean, your question is more like, if I don't want to tie up all my capital, then take the profit. I mean, I'm never going to be upset if somebody's like, yeah, that ratio spread, Chris, I just didn't want to tie up the capital. I took the profit. Good, take it. Okay. Every ratio spread that I take, I'm typically saying I'm willing to own the shares. I don't think I'm going to get assigned, but I'm willing to own the shares. What I typically look at for ratio spread is if I'm pulling in credit and I'm up probably 80 to 85% of that trade early, then I take the profit. 50% is fine. It's fine. And 50% can happen very quickly. If I went out 12 months and in 2 months I was up 50+%, I mean, it depends on how big that asset would be. If I'm trading an asset that's, $200 to $300 and I'm like, yeah, I really don't want the assignment there, then sure, I can take the profit. But typically for a ratio spread, I'm putting them out of the money far enough and the probabilities are high enough that I don't envision assignment. So if I'm up, 80+% of that credit, that's typically when I start to manage them. Very rarely do I get myself in a position where I don't have, buying power ready. It's in fact, it's rare that I'm going to have, less than probably 30% buying power. But I get what you're saying. If you don't want to tie up the capital, then take the profit, and you can always get out of the trade early. And if 50%, it's fine. It's, it's a transaction. You get in, price goes up, take the profit. But if I'm willing to sit on it, I mean, the further up that asset goes, the further out of the money my strikes are, the higher probability my trade is. Doesn't mean it's guaranteed, but it's still, I go from a, let's say, 88 to 90% chance of profit from the beginning of the trade, and price rips to the upside based on that options chain and volatility. It might show a 98% chance of profit now, a 99% chance of profit now, because it's so far out of the money. Okay. All right. Good stuff there. Bruce says Schwab will close out my short position on a 0 DT for a SPY debit spread 1 hour before closing. They don't close the spread. This takes any risk off of them, pushes it back on me. I don't do debit spreads on SPY. That's way smarter, Bruce. Honestly, I wouldn't trade SPY that often, ever. If you're doing 0 DT, don't trade SPY. Honestly, if you're doing 0 DT, you should trade XSP because it's smaller if you want less risk, and it's also cash settled, and it's an index trade. So XSP is way better. It's not as liquid as SPY. That's the only crappy thing about it, but it's getting better and better because SPX is so popular. But yeah, if you're at 0 DTE, I wouldn't trade SPY. I would do SPX XSP all day. Horrible fill price. Yeah, then if you're worried about that, Mike, then don't take the trade. How many trades am I taking with my ratio spreads where I have I'm not trading like these crazy unknown illiquid stocks. But I get it when price is up, you can't get the fill that you want. Okay. So I ride them out. Don't stack up a bunch of ratio spreads that you're like, well, I have no buying power. You need to give yourself some buying power. And you're saying like horrible fill price. I'm like, are you still filling for profit? Because that's your question. If price is going up, it's like, well, you're still taking profit. Even if it's small, you're still taking profit. So it's not a bad problem. I'm saying like for me, I'm taking those ratio spreads expecting like, well, if I took the assignment, here's what I'm going to do with it. If I don't take the assignment, I'm going to let this thing, with time on my side and price moving up and it gets further out of the money for me and higher probability to profit, I'm going to just let time pass. I'm going to let this profit, get as high to that max credit as possible and let it close down. And like it's like for me, it's like 80% or better. We had a lot of trades last year at the $3 credit, $4 credit, $5 credit. If I'm up $400 on a $500 max position, I don't mind taking that profit. I'd obviously love $500 or 450 or 475, but depends on how much time is left in that trade. Yeah. Okay. Is the Oracle trade and project options that's still good? It should be. It should be. I know it's opening bell right now, so we'll take a look. Here's Oracle at 172. I did let's see, this one's closed. I did a 115 by 105. Is that what I did for Oracle? Oracle was a 115 by 105 ratio spread. That's for Project Options Edge. So I'm going to put this down here. 115 by 105. So technically my break even is going to be like the 105 to 95. That's going to be roughly my break even. So there's no upside risk on Oracle for me, and that would be my potential trade. Okay, so as long as Oracle stays here, moves higher, or even slides lower to even Liberation Day lows, I'm still out of the money enough to hopefully see that trade safely profitable. Okay. David says, how do you determine when a price option is between strikes? Not sure I get that outside of if literally the asset price, right? Like if I did like a 170 by 180 on Oracle, then price is in between. Is that what you're saying? How do you determine price when option is between strike? I'm not sure what that question is, David. Try to follow trading plan engineered options. Should I skip the bonus trades for a while? Take the bonus trades they're posted. Dennis, I would say if you're new to engineered options, let's focus on the master classes. Let's focus on the core strategy. My core strategy is going to be a monthly. My core strategy is going to be a weekly And then the monthly, I'm sprinkling in. Now, keep in mind the monthlies are going to be they should be a much higher probability as far as the historical edge. Monthly candles are going to be bullish like 60+% of the time. And that includes bull and bear markets. Weeklies are going to be closer to like 56% of the time, 57% of the time, including bear markets. So our edge is to get good alignments, and that way we can increase our weeklies up to like 65, 70%, our monthlies up to high 60s, 70%. Okay, as far as closing early. Well, if you're in between the strikes closing early, if you can eke out a break even or better, that's a win. If you're closing early and you get a break even or better, fine. I'm not sure why you're closing early. If it's in between strikes, it just means you don't like the trade anymore. I mean, look, I try not to be a micromanager of my positions. When I'm in a trade, I've kind of committed to that risk in my brain, and I let the markets play out as it needs to. I plan on winning as many trades as I can, but I try not to fiddle with it too many times because, if it's in between strikes, but it has another day or two for expiration, what are the choices? If it gets above your strikes, you might win the trade. If it goes below, you take the risk. That's it. Like it's a black and white result. So you either accept that risk or you're trying to micromanage that risk. I tend to, be a little bit more committed to like, look, I took the risk for a reason. I've got to be comfortable with that. If something drastically changes where my whole trade is like, I don't really like this trade, then yeah, you can close it. Break even or better would be great. I did that in the master classes last week, Andrew. We've got some the 130 expirations in your tracker. Those are all engineered options for the monthlies. All my weekly XSP trades were rejected and tagged as pattern day trading. They shouldn't be Shreed, especially if they were set with a expiration out further. I mean, you can enter the trades, right? If you enter the trades with different expirations than a 0 day, then I don't know why that would be rejected. That sounds like a question for your broker. All right, let's get to 0 DTE. Take a look at our SPX this morning. We're trading a little bit softer at 69. Let's do some calculations. Our VIX is back to about 1605. Let's keep an eye on this morning. It's going to be just over 1% max move. 1605 divided by 16, 1.00%. So my gamma levels, we've got highs at 69.50 and lows at 68.50. See if we can get that to look pretty good on our option spreads this morning with the current delta. So I'm going to go SPX. SPX for today, plus minus is now down to 25 points. If I went, 50 wide, I mean, we're at 69.05. I went to 69.50. Right now, that's a 7 delta. See if I can get anything for like a 50 by 60 or a so this 68.50 is a 12 delta. I'm going to go 10. So if I go 45 by 35, I can get $1 for this trade. If I get $1, I wouldn't be terribly offended. That's a 7 delta call. Let's see what's going on here. So gap fill would be around 68.75. I want to be below 50. I mean, realistically, I'm going to play this a little bit safer. Let's see. I'm going to try to go 30. This I don't know. This might not be great. If I went to, let's say, 15 wide, 55 by 70, and maybe the full inefficiency fill around 35. Let me see what that looks like. So if I go 35 by 20. So if I went 15 wide, I don't love $1 on the trade, even though this is a pretty high probability winner. But I'm risking $1,400 to make $1. I don't love that trade without having some defense, right? I'm going to let this one sit. I'm going to do this. I like these strikes. Okay, I'm going to go 10 wide strikes and see if this will fill for $1. Let's go after $1. We've had a good week so far. Let's see if I can get $1. I'll try $1.50 credit. So it'd be a 10 wide for $1.50 means I'm risking $8.50 to make $1.50. It's only trading for 65 cents right now. I'm playing this pretty conservative, but if we have any directional flows today, I mean, there's a pivot point. If the market stays positive gamma and it wants to get back up to highs, we're talking 40, 45, and 50. So I want my call spread to be up above that. If we, go lower, fill this gap, get it to negative gamma, we have this inefficiency for the week. So it has to be, below 50. I think we got to go to like 30, to be honest. So I'm looking at the 35 by 25, 65 by 55 for $1.50. And again, I may not get filled on this trade, but let me post that for this morning. One thing I might adjust is if I see prices either bouncing off of the 68.90 or bouncing off of this potential gap fill from yesterday, then I might put in a tighter bull put spread and see if price will stay there. But I don't want to get too flirty with some noise. If anything we've had this week, it's been a lot of volatility and some noise. Mike says account is set. Yeah, give them a call. Account is set to closing. What is that asset you're looking at trading, Mike? If it says account is set to closing only, is it a certain ticker? Yeah, ETHA. Yeah, you might just have to call them. That could be listed as I think they call that like a white label stock or whitelisted stock or something. And if they approve that for you, then that basically removes that restriction for you like all the time. I did that on some of my international ETFs when I did Ethereum and I traded some Japanese yen stuff. Yeah, they'll usually lift that restriction, especially you have the buying power and you know the deal, like you understand the risk, blah blah blah. So if you're trading risk defined, I'm sure they'll lift it for you. Then you can execute how you want. Okay, let's see what happens. So why am I not getting into the trenches here with price right at the money? Because if you can see this pretty open area, like there's a lot of transitional space in this 0DT positioning, right? If we have positive gamma, there's room to drift up to 40, 45. Granted, we have a 32, 38 plus or minus on the day. We opened at 69.06 from the looks of it. This opened 69.06. Let's do the math. 69.06 plus 32.38. So we got a 69.38 would be, right into this first part of the gamma, 69.40. So if the markets were efficient, we should stay below this level, right? If markets are efficient, we stay below 69.40. If we go 69.06, so I'm going to put a little black line here. And if we go, I'll move this on my other screen. And if we go to 69.06 minus 69.06 minus the 32.38, that'd be a 68.73. So let's recenter this on the close, which was 69.13. So there's my VIX box. We'll calculate that in just a moment here. And we should see, as far as market maker efficiency, 38 and the bottom around 68.73. So based on a market maker move, that's where prices should stay for the day. Under this and above this. This is 68.73. This is 69.38. Okay. If you wanted to position for that, then you're doing a 69.40 and you're doing a 68.70. That's a market maker efficiency move. Now, when you do that, when you know the exact market maker move, that trade is probably best to get in and get out quickly with profit. That's going to be how that trade serves you best versus trying to let that hold all the way to expiration. But, I do judge the market makers. I do judge the market efficiencies by when we have an opening bell and we have a plus or minus, I do want to see that the price is inside of that plus or minus for the day. Okay. There's always a chance you can take profit during the day. But I want to see like markets true efficiencies where, if I'm really tight to this top and I'm really tight to this bottom, this price might test the exact level. It might test the level. It might go through it and then come back. It might go through it, then come back. It might be just a couple points above or below. But that's still, if you're asking the market, that's still a pretty perfect day. To be within like a point or two is still like, that's pretty rock solid. Right. All right. So pending order coming for daily profit members. It is the 55 by 65. So this is pending. I'm not in yet. I should put here like the plus minus is 32.38. Putting the expected move top around 69.38 and bottom around 68.73. The gamma levels are a bit wider. I should put the gamma transition levels. Transition levels show open space to 69.40 to 69.50 or 68.50. I'm trying to position safely above and below. Okay. Again, that trade may not fill. If I'm having it sit here for $1.50, if I see it trading for $1.25, $1.30, I might take the trade. I think it's still good levels to trade, but I just don't want to risk, if it's less than $1, I'm risking $900. It's like, I'll risk 880. I'll risk 870. I'll risk 850. That's okay. I can play some defense there with that, $1.50 if I get it. So if I see $1.20, $1.25, $1.30, I'll probably adjust it. Or I can just leave it as is for $1.50. Okay, it's in members Telegram for daily profit play. Yep. Okay, so trade is pending. Let's see what happens. Let's go to, I'm gonna open up some real-time gamma here. Let's also take a look and see how the rest of this week plays out. So we've got some scattered gamma today. Let me go to SPX. Okay, so 68.50 to the downside. That's actually my largest strike for 0-day. A little bit different than what they're showing on TradingView. Well, I guess not. 68.50 is now one of the larger strikes. I mean, if we end up getting down to 68.90 or breaking into negative gamma, this could be a little bit more volatility. We could get filled. We could get filled. In fact, I will. So this trade, if we get some volatility today, we might get filled at $1.50. I think for some defense, let me calculate out the opening price. Obviously it's hard to call the bottom if the VIX is rallying aggressively. So let me move this down to about 17. Okay, if we see the VIX spike up to 17, I might have to, adjust my bottom because 17 over 16 is a 106%, 1.06% versus 1%. But what I'm thinking is on this put side, 55 by, this would be a, where's my put? The 68.35 by 68.25. I'm going to stack in, let's see, that would have to be below. We're at 1% right now. Let me double check this. So if we open up here, and we go 1% lower, it should be difficult for price to get to 68. I'm going to put 1%. So it'd be difficult for price to get to like 68.37 today. But in case it does, I'm going to go 40 by 30 by 15. So 40, which these strikes do not overlap, by the way. So 40 by 30 by 15. Okay, this is a broken wing butterfly that's trading for nothing right now. But if this were to offer $1, I'd be risking 4 to make 1. But I also have $1,000 profit trap in there. We'd have to have some pretty heavy volatility to the downside for this to get filled. But I would also be pretty happy to have it in my arsenal. If you want to go lower than your put side daily profit play, then you would do something like this. You would buy the 30, sell the 20, and then buy the 05. So that way your strikes are, you got some immediate defense right below your daily profit play. I guess this is probably the safer trade of the two. I'll put this in for $1. $1. I want to make sure we don't have any crazy gamma that sticks out at like 6,800, by the way. So gamma at 6,800. I mean, I see a strike down there, but it's not nearly as prominent as 6,850. Dan, it's posted, man. Daily profit play alerts. It's posted. You got it. Okay, you got it. All right. Here is my real time. So, look, this could be a pretty solid market maker day where it's like, I'm trading it pretty conservatively. We don't have a lot of gamma below 6,850. Okay. But I look at this inefficiency from that rip that happened on, I guess that was Wednesday afternoon. This is Thursday's trading. So here's today. I could see this candle being the inefficiency. That is a 68.30. Okay. 68.30. So I don't think we're going to get there. But like I said, I don't want to be forcing trades in the middle when if I take trades in the middle, then I'm probably going to have to get out early. But if I'm looking at kind of safely getting, sell above and sell below and kind of get in some profits for the day, it's probably, to me, it's going to be a little bit safer to be further out of the money. Stephanie, I'll get to that in a second for that profit trap question. All right. So I've got a 68.50. That is my largest gamma of the day. I'm seeing 68.60 and 68.50 lining up pretty nicely. I mean, if we get there, here's a good thing. If we get down to 68.50, that's not going to be great. Like, it's going to feel like crap, but I do think we could get filled at $1.50 on my 10 wide. Okay, which I think is still a safe trade for the day because we're down to like 35 by 25. So I'm going to put this trade in for $1. That's a defense trade. And I'm going to add a broken wing butterfly bottom defense trade. 123, buying the 68.30. Okay. And again, that might not fill. If price just kind of chops around here all day, I probably won't get filled on my 10 wide. And, I should have traded it more aggressively, but I'm not. Okay. I'm respecting what I see here, which is a lot of open space for price to drift. So when you see stuff like this, a lot of times we can see prices are very calm in the middle. And if you're aggressive right in the morning, you can grab some quick profit here, but you got to get out fast. You got to get out with 15, 20, 25% profit, and then you're done for the day. Don't try to force this trade because it is so easy for a setup like this on Gamma to have some flow later in the afternoon. And that's what I'm trying to avoid. I want to make sure my levels are pretty darn safe. Okay. What trade are you looking at there, Dave? 320 credit on Thinkorswim for what trade? Because the trades I'm posting, you're not getting 320 credit. So either you put in the wrong strike or you got too many contracts in. What trade is it, Dave? 68.30, 68.20, 68.05. That's a broken wing. Daily profit play, that should be a 10 wide. You have a bear call spread 10 wide. You have a bull put spread 10 wide. That's right now offering 50, 60 cents credit. There's no way that's going to be offering 320. Just, I guess, double check your strikes. 69.55 is my sell call. 68.35 is my sell put. Broken wing butterfly 68.50. I mean, that's up to you, Venkat. I'm not going that aggressive. If I put the trade at 68.50 broken wing butterfly, then I would want a decent amount of credit for it. Let me look at that trade. If I went 50, so if I want to basically pin the 50, let's go 60, 50, 35. I mean, even that trade right now is offering 5 cents credit. Maybe that trade's a little bit tighter. 25 cents. That's like, I'm not going to take that trade for 25 cents credit. So if it filled me for $1, risking 4 to make 1, I don't mind that trade with a profit trap of $500. But just taking it like right now for, 20, 25 cents is not a good trade to me. But it's a good level. It's just, put the trade at a credit. You're like, okay, I'll accept that risk. Okay. All right. I want to go take a look at I want to look at February, March. Okay. Call me crazy, but I think we could be, again, with defined risk, I think I could take a trade with defined risk that would hopefully give us a, probability for February and March that the market, struggles to go higher. Okay. So let's take a look here for some February expirations. If I went February monthly, which I looked at this yesterday, okay, I did put in a couple of trades here if you'd like to see these. I have let's see, that one is pending. This one, yeah, these two right here. So, I mean, I guess I could just call these bonus trades. There's no official service these are going to be in, but a 71.20, 71.30, 71.45. That's a broken wing call fly, broken wing butterfly, but it's all calls. I'm trying to call the top for $1.50. My risk could be $3.50. I'm risking $3.50 to make $1.50, but I have $1,000 profit trap at the higher end of the expected move. Okay. So this is what I was looking at. You can see here in my option chain. Can everybody see this expiration, by the way? February 20th. So this red bar in the middle. So look at my strike prices. See how that red bar is moving? So that is the lower end of the expected move right here. And this is the upper end of the expected move. So what I'm doing is I'm looking to position for something that's fairly high probability, like a less than 20 delta. Okay. And then I'm also giving myself a profit trap. So, what would have to happen for this trade to get filled? We'd have to go up. If price goes up in the SPX, if we get to, 69.50, 69.75, then this might get closer to getting filled with some time left in the trade. So again, this is totally optional, but I'm taking this trade for the February 20th expiration. I'm going to now look at one. Let's see here. I'm going to go out to the end of the month. So we have a 27th expiration. Let me see which one is, what day of the week is that? So the 27th is a Friday. All right. I'm going to take that 27th expiration as well. I'm going to go up to the end of the options chain. This is a 20 delta. I'm going to go 40 by 50 by 65. Right now that's trading for 80 cents, 85 cents. I'm going to put this in for $1.50. So this is a Feb 27th, end of the month, broken wing butterfly at the top end of the expected move. Okay. Again, could I be wrong in this trade by calling the top of the market? Obviously, yes. But after, 10 candles from bottom in April to right now's price, I think if we, get to 7,000 plus, that's a great milestone. But because we're getting this just little tiny grinds higher, I guess we're getting an earnings season. I just wonder if we're going to have Mag 7 lagging. Right now, literally it's being called the Lag 7 right now. So again, based on the option chain, this is an 18 delta. That should give me a decent probability of profit on the trade. Obviously, I am planning for some chop and some indecision and some potential weakness over the next 30 to 60 days. Doesn't mean bear market. It just means, well, if I'm right in that rising wedge, we go down to 6,600, 6,500. This trade might not get filled. But for right now, I'm just going to make it a fine risk trade for a buck 50. I'm risking 350 to make $1.50, but I have $1,000 profit trap. And if it's up there, that can help. So let's see. I'll put it in here pending at a buck 50. Okay. Let's see. I was looking for a debit of 25 cents like the other day. Oh, you're talking. Oh, so that's not a BWB. That's you're looking for a butterfly spread then, not a broken wing. Broken wings are taken with credits, right? Broken wings are credit fills, not debits. You're just talking about like the defense trade. Um, yeah, but I don't know if it's going to get there. Right? Look at my live gamma right now. Live gamma right now, my 6850 is nowhere to be found. So it's cheap, but I would imagine that if this one isn't populating right now in gamma, it's like it's going to be tough for this to just come out of nowhere. Right now, the more attractive levels would probably like the 6940, 6950 zone. If we're going up, that's probably the higher probability trade as far as putting a butterfly trap up here is trying to get into that upper gamma. Okay, so we'll see because right now it looks like 6850 would be it, but just be a waste. I think right now it's in positive gamma, and we have room to get up to 30, which was close to yesterday's highs. 30 to 40, that seems like the most attractive level for price to find. Whether it stays there all day, I don't know. But if it stays there and rejects, I don't think we're getting to 6850. Okay. All right, good stuff. I will post. This will be in my public Telegram. This is going to be a bonus trade. Let me build a little. See if I can go. I'm gonna try to build out a quick thumbnail. See what old AI will create for me. Okay, let's see what it gives me, and then I'll throw in the trade. 69.45, 68.55, 10 wide buck 40. Okay, Larry. 69.45. All right, dude, you're flirting with that top gamma just a little bit. 50% ATR 69.45. Top gamma 40.45. Okay, you're right there, man. Godspeed, sir. Yeah, I'm gonna go a little bit further out of the money. If we get up to these levels and it happens fast enough, let's see if the direction will set up. So this is my pen. So we're trading at 65 cents right now. That's a pretty good fill. You're going, what was your, so you're 55, I'm 35. You're 45, I'm 55. So I'm clearly further out of the money. But you're in, I'm not. So hats off to Larry. I'll be cheering for you, dude, as always. Bill says, should I set a closing order on the Jan 30th expiration or wait till next week? Bill, what trade? Dude, just make my freaking image. Sometimes I want to yell at AI. It's like, just make it. All right, whatever. Maybe I already have one. See if I have a bonus trade. Looks like I don't have that. All right, whatever. I'll just post the trade. Yeah, Van, we did. We are in a trade for the 26th, and we're in for a monthly trade that's out to the 30th for engineered options. I'm going to do a video update for engineered options today to show the position that we have. Okay, let me see if I'll just jump into Grok if I can't get it for freaking Copilot. I use ChatGPT a lot, but I have an interview at 11:30, and I've got some bullet points on tariffs that I need to talk about. So I'm going to keep that up in ChatGPT and not take up my thread. I'll go to Grok on Twitter. And I'll get the thumbnail. Make me a show thumbnail. All right, see what old Grok can come up with. Grok's good. Copilot's like quickly all the way down the bottom of the food chain, according to what I see. You've got Gemini's highly sought after. Grok's been really good. I think they just did like another big video update. Chat GPT is fine. OpenAI is fine. But yeah, I think Grok's pretty solid. Bonus trades. Well, they just gave me a real image. It's in the tracker, Omar. It'd be in your Telegram for engineered options. It'd be in your tracker. They'd be the ones with the 130 expiration. There we go. There's a bonus trade. We'll try this one. All right, bonus trade. I'm not a bear, but given the monthly chart candles and this 7,000 handle that is showing far more call selling, I'm looking to see if the market will stagnate or stall going into February, March window. So I'm doing SPX 227 expiration, buying the 7140 call, selling the 7150 call, and buying the 7165 call, and put in $1.50 credit pending good till canceled. This is a broken wing butterfly, and I am needing price to rally a little bit towards the upper end of the expected move, but not surpass 7140 to 7150 by expiration. So $1.50 credit, likely profit if filled. 350 is my max risk, and I have a $10 profit trap. If price is 7140 to 71, we can technically go all the way to like 50. I'll put a bonus trap. So a $1 to $10 bonus trap between 7141 and 71. That would be 59. Yeah, because we went 40 to 50. 50 is the pin price. So that's the perfect pin would be 7150. Go another 10, that's 60. That's my like trap is done at 60. So 7141 to 7159 offers a bonus trap of anywhere between $1 to $10. We'll see what happens. See if I can fill this with a bonus trade image. There it is. Okay, so 227 expiration. All right, what are my comments here? What am I getting? Not sure doing currency, but there was a rate check from BOJ. Currency strength for the day. Yeah, I saw that. That was around 2 o'clock this morning. But you notice what it is? Noise. Currencies are like that, where you can get like this one-off move, and that's a lot of volatility in 5 minutes, but it was quickly right back where we started. So a lot of noise and still a very efficient market. What time engineering options video? So we'll wrap up this session. We'll wrap up the session. I've got to do an interview at 11:30, and I think let me double check my calendar here for today. And then I'm on with Lance at 1:30. So somewhere between probably like 12:30 to 1:30 window, I should get a video posted for engineered options. So between 12:30 to 1:30, I'll be able to post a video. I'll post it in the member Telegram for engineered options. Any ideas why I can see Chris's video message? For Melinda, what videos are you talking about? Like the videos that I post? Those links should work on any browser. They should. It's a public play link if you're talking about those bonus videos. Let's see here. What am I doing wrong? The defense put broken wing butterfly shows. Correct. It's not filled. It's a pending order. Like you have to put it in as a credit because it's probably trading for like a 1 to 5 cent debit right now. Like the broker knows like you're out of the money and you have to tell it what you want. So I'm putting that trade in as a pending credit. Okay. Yep. 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 Yesterday's bonus trap. I'm trying to think. So who was asking that for yesterday? Sharita's asking about yesterday's bonus trap. You talking about my daily profit play trade, or you talking about the bonus trade I did for build a trade? That was a bonus trade we posted in Telegram yesterday. Here. So the 69, 45, 55, and 70, that's an end of this month expiration. That's out to next Friday. I got filled on that trade for $1.95. I also have a 69.30 by 40 by 55 for $1.65. I'm in both of those trades. So that's a bonus trade. Hopefully, price is going to stay below 69.40. And then in this one, I've got a little bit more wiggle room. This one, if price stays below 69.55, then we've got a nice winner with some bonus profit potential. So those are inside Telegram. Today's bonus trade, just for fun. So is this filled yet? No. It's offering, like right now, it's trading for like 80 cents. I'm not going to take the trade for 80 cents. $1.50, I think that's good structurally. I'm risking 350 to make 150, but I'm also at the higher end of the option chain. This should automatically start with about an 80% chance of profit. Okay. And that gives us that gives a chance for the market to go up to, let's say 7,000 plus. And if we get filled on this level, we still have some wiggle room. So just depends on what it looks like. If we get to 7,000, okay. But I'm calling a bit of a near-term high, according to the option chain with like current volatility. I thought Lance called bonus trades risky. I don't know what that means. Maybe Lance's bonus trades are risky, but I tend to care about my bonus trades where if I'm going to take a trade, it's the same risk I would take for any trade. Like, the way I define a bonus trade is I like the trade. It doesn't go to any service. So to me, it's a bonus trade, but it's a live trade. Like if it gets filled, I'm in the trade for a reason. That's the one you're setting the closing order. No, I'm just going to keep it. I'm in for $1.95. I mean, if we're looking at if it's trading for like 45 cents or less, if we're up like 150 bucks in the trade, I might take the profit. Otherwise, if it's looking good for us, then $1.80, 85 would be great. But yeah, I mean, if it was filled and it's trade down to like 40 cents or 45 cents, then I'll probably take the profit. Okay. All right. Good stuff. Um, so let me ask this. I know I have some new traders that have popped in here over the last couple of weeks. Engineered option traders, I will get you a video today. So let's see here. We did a masterclass this week in engineered options. I'll get a video touch point since we have trades in. Right now we have a 126 expiration. So we have a 126 expiration XSP trade. We have a 130 expiration XSP trade. And we may have a 130 expiration SPX trade with just one contract. I will double check that when I send out the video. I'll do a video update, hopefully between 12:30 to 1:30 p.m. Eastern time. Just give me, I'll probably do a quick like 5 or 10 minute video update based on those positions where things are at, what we need to have happen by Monday for our trades to expire. The 126, if it's looking good, we need it to stay above 686, I believe. And if it does that, then we're looking at full profit for that trade. The 130 is out to Friday. We'll see what the market gives us. We have a lot of noise and a lot of news next week. There's earnings on Mag 7 stocks. We'll take a look at that here in just a few minutes. And then we also have the Fed on Wednesday. So it could be just an absolute like noise fest where it's a lot of potential built-in, baked-in volatility, but nothing really happens. I wouldn't be surprised if like every Mag 7 stock, the big Mag 7 ones perform with positive earnings, but you never know. Like good earnings is fine, but they're also like they're kind of out of flavor this year. I mean, it's called Lag 7 for a reason. If you look at what's happening in the bigger picture, it's like right now, if you go mags compared to IWM, actually, this is an easier way. Go IWM over mags. Look at what's happening. Okay. Now, would I say that this is like a runaway move and the small caps is absolutely crushing it? No, because you're seeing some Mag 7 performance doing better today. Right. But out of the gates, this is November of last year. Look at where this thing bottomed out. That would have been that really crappy market breadth that we saw like in November as we hit all-time highs. The Mag 7 kind of topped out. And at that point, the market was just like, look, this concentration is too much. And you're starting to see money move away from Mag 7. They essentially did nothing. I mean, there started to be some pullbacks, but like NVIDIA did nothing for like 2 months. Tesla's been choppy over, maybe a $20, $30 range. Microsoft has been choppy with a bit of weakness. Meta's been down. So anyway, they've just been lagging. Hence the word lag 7. Russell came out screaming where it started to perform better at the end of the year, started to really rip this year. The Russell was up over 8% up until, I guess yesterday, today, but still it's off to a good start. If you take a look at, so try to think what else, even IWM over QQQ. IWM, QQQ, same type of thing, right? NASDAQ showing strength, but tops out. Russell is outperforming. Is your stock mania today on engineered options? It will be. Yeah, Lance and I will shoot the breeze for a few minutes, and then we're doing an engineered options session. The video update will be inside your Telegram, Jim. So your engineered options member channel. I'll just throw in the direct link there. And if I give it to the team, I can have them take that video, download, and throw it in your classroom. But a video update, I don't really want to post that in the classroom as like this. I post master classes, which we've had 4 of them now. But a video update, I'll just post the direct link in Telegram. It's going to be, maybe 10 minutes. Okay. All right. So we have lines in the sand for engineered options. I don't want to micromanage these trades. If we stay, by Monday, if we stay above 686, we're looking at 100% winner. By the end of the month, these got filled pretty low at the dips we saw this week on that big sell-off on Tuesday. So if we're staying above those lines in the sand, I think it's like a 685 for the monthlies. We'll just take a look at those levels. Okay. All right. So there's that for engineered options. Daily profit play is see if I get anything filled today. Waterfall income. We're in a trade with some pending orders. News breakers. I've got Netflix running till the end of the month. I've got Microsoft running to the end of the month. Pinchpoint had another winner yesterday. We had OKE that hit our take profit at 50%. Let's see here. Project Options Edge. It's been a pretty active, let's say 3 weeks of trading in Project Options Edge. I've probably issued, 5 or 10 trades, which I like all of them. This is probably because I'm the most discretionary on Project Options Edge, but we're winning 97+% of our trades. And yes, it takes more capital. Yes, the strategies are, not in a box. It's like I can do whatever I want. So, if you're comfortable following alerts, placing some ratio spreads, maybe some naked put like there's just combination of trades that I use because it's exactly this. Like I want to make money in Project Options Edge. I want to have a plan A and a plan B and a plan C. This to me is that if you're aspiring to go from like any one service to then working into like I want to be more like full-time portfolio management investing. This is an income style service, but also with a backup plan that I don't plan on losing many of these trades. If we get assigned things like this year, we got assigned on CMG. Okay, we are repairing CMG, and hopefully we can turn it into like a couple $1,000s. So I'm still holding CMG, and right now, where the heck did it go? There we go. CMG. It's trading at 41.07, and I have it covered at 40. If I get this thing repaired, let me check my break even on CMG. CMG. My break even is 30, about 35.11. 35.11. I get it called away at 40. So 35.11, get it called away at 40 on 200 shares. What started out with, oh man, we're getting assigned on some naked puts. I'm going to flip it for $978 by March or June. Like, I'll take that. So I have the capital. It's not super expensive. This is tying up about, 8,000 cash or about 4,000 margin. And if I can flip, let's just use 8,000 cash. If I can flip 8,000 cash for $978, I'm making 12% return on that cash in like a, 4 to 6 month window. I guess 3 to 6 month window. So this is why I keep dry powder available. Because if I can repair a trade, I'd rather do that than take a loss. So that is the beautiful thing about the stock market is, finding stocks that actually have cash flow, finding stocks that actually matter. This is why you don't see me chasing AI crap that I don't have any belief in. Everyone's talking about, this stock's up 80% year to date. It's like, I don't care. I don't want to be that type of like chaser stock picker. It is, to me, it's way too emotional. If you get a winner and you ride it, that's great. But finding those needles in the haystack is so much more difficult than just finding good quality companies that should go up. If they go up, I get paid on income. If they don't go up and I get assigned, I can repair them and not take losses. Right. So did I go? Yeah, Rob. So we did on daily profit play. We looked at the market maker move today. 69.38 would be the market maker high. If we go higher than that, then take your it's about a 1% move. We had like a 15, it was like a 15.99 VIX this morning. So right here, we're at like 16.16, I guess. So that'd be slightly over 1%. Let me check that right here. So 16.16. So 1.01%. So take that from your close yesterday. 1.01 is a 69.82. $69.82. And my bottom would be from the gap lower, and we would be going that 1.01%. Gap lower, 1.01 puts us around 68.36. So are those likely going to get filled? No. But That is a safe way to calculate out a top and bottom. Okay. To me, the top is much easier to calculate than the bottom because with the bottom, prices are falling and the VIX is probably going up. Okay. Sharita says, I've become VIP for engineered options. Do I get project options included? I don't think it's included, Sharita. You have to talk to the team. I know they're running a promo where there's essentially like a bundle. I know Project Options Edge right now is being offered for some of my lifetime members to get it at a discount. So if you're a lifetime member and you want to, upgrade or include Project Options Edge, just talk to the team. That would be support at prosperitypub.com or, call our team, ask about Project Options Edge. And we've got some like bundle promos and stuff if you're a lifetime member. Okay. It's a bonus opportunity to get involved. Yeah, perfect. So whatever works. But I mean, I look, I love all my services, right? I don't have a favorite. I just know that when you don't put me in a box or a corner and say, Chris, this is what you have to do for the strategy. When I have the freedom to trade how I want to trade and how I've been trading, successfully for a long time, let me be creative. And I'm not making this like super confusing. It's like I do a lot of the same trades here, but a lot of them are high probability. And if we have any issues or any, like assignments, you can get out of the trade for a managed loss, or like I like to do is typically take on an assignment, repair it. Okay. Now, when is it? Here's a really good lesson. When's the time not to repair the market? If we're in a freaking bear market, you don't want to be holding stocks. I don't want to be holding positions that have no end in sight. 2022 was a very challenging year to hold stocks because we saw drawdowns in individual stocks anywhere between 30 to 50 to 75, 80%. There were stocks in 2022 that were up hundreds of percent during COVID that were down 90 plus percent by 2022. Even Mag 7 was down anywhere between 50 to 75%. Like Meta's drawdown was like 76%. So you don't want to be stuck in those positions. So when we go into like a legitimate correction or a legitimate bear market, if I'm doing Project Options Edge and I'm doing, ratio spreads, I will do what I say is like, I don't want to own the shares. I'll manage the stop out on the credit. Okay. So there'll be a way to manage the trade. We'll still have a high probability of profit, but I understand like in a bear market, typically nothing is safe. You can look at sectors right here. Okay, look at our sector year to date. Right now, energy is leading the way. This is not the typical rotation that you see for a strong bull market. Okay, this is like the late innings of a bull market when we're starting to be led by these sectors versus our tech sectors versus our information technology sector, communication services sector. These sectors typically are not leading in a strong, healthy bull market. I think it's nice that we're rotating to them versus having everything, lag because of tech. But eventually this will lead us to like the late innings, if not, okay, we're gonna have a stall at some point. That makes sense. So the good thing is the market's still resilient. I expect there to be resiliency in 2026. It's just, I mean, right now you really have to be able to block out the noise. There's so much noise in this market, right? You like this week is a perfect example of what noise can be, because Trump can say one thing and then the next day says the opposite. He will probably go nuts on Truth Social. He will not be quiet. So just plan for, I mean, if we're talking about plans for Greenland or framework for Greenland, we're probably going to talk about plans for some other country, you know? Um, anyway, and the market will probably have a knee-jerk reaction to it, but typically it's going to be throttled back, shortly after. So that's not a bad way to like understand, like just be smart. Like just be smart, allow the market to be noisy. It's going to be noisy. I'm keeping a lot of my trades out of the money. Make sure when you're setting your trades up, it's like, your reward and risk. I can't emphasize it enough. It's like, know your reward and risk. And if you're taking a trade, it's like you're not trading anything blindly. You're not trading anything on a gut or hunch. It's like just have good mechanics. Good mechanics, good probabilities, have a plan, and you'll be fine. Do I think the market's going to drop 30% this year? Probably not. Could the market have drawdowns of 10, 15, 20%? Sure. But do I think it's going to stay down? Probably not. So that's just what I'm prepared for. Okay. Bonus SPX 227. They're all calls there, Linda. It's in the chat. These are all calls. So I'll put it in Zoom chat for you. So that's a 7140 call with one contract, a 7150 call with two contracts, 7165 call with one contract. So that's a broken wing butterfly structure. So again, I teach this strategy a lot because it can be confusing, but all it really is if we have, I'm buying, so let's put this on an option graph. Let's say the SPX is here at 69.17. Okay. And then this is price. So my trade, I would be trying to take in credit of $1.50. Okay. And then the 7140 is here. So price has to go up, or I'm giving price wiggle room to go up. Now, from 7140 to 7150, I have that profit trap because this is, if you just dissect the trade, I have two contracts at 7150 and I have one contract at 7140. So what this gives me is a setup where if it's beyond, let's say this is 7165 for one contract. So if I buy a 7140 with one contract and I sell one at 7150, that is a bull call spread, right? So the bull call spread out of the money like this is very cheap, which is why I have this really fat profit up to a $10 bonus trap. Okay. So 7140 buy call, 7150 sell call by itself is a bull call spread that I'm going to pay, maybe 50 to 70 cents for, and I can get $10 of profit. There's my profit trap. Now I combine that with a 7150 sell call and a 7165 buy call, which is a wider. This is 15 wide, and this is 10 wide. So this one is wider, and it's a credit spread, which is why this trade can be offered up as an initial credit. That's what a broken wing butterfly is. Now, a broken wing butterfly to me is I am calling the top, right? I do not want price to be above 7150. I want price to stay below that because that is my maximum, profit point. If it goes beyond that, I still technically have until 7159. Okay. Before I hit my kind of break even level and I give back all of my credit. At 7160, I would essentially just be sitting at break even. It'd be technically 7161.50 would be my break even. So break even is 7161.50. So anything higher than that, I take on risk. My max risk would be $3.50. So price can go sideways, right? If price goes sideways, by the way, this is not going to fill. So this is price. If it goes higher and we get filled on this trade, what I want price to do is basically hit a line in the sand, call it 7,000, call it 70.50. I want it to go back down. That way, this is a safe trade for us to make money. If price is going to ramp up, but it's going to get into this profit trap near expiration, well, I'd love to get this profit trap at expiration. Okay. But the point is, if you get more and more familiar with like taking a trade, and here's a good example. When you build some of these trades with me, go to Option Strat, which is totally free if you want to use this, just the visuals. You don't have live feeds and probabilities and stuff. But if you want to build out the visuals, this will give you an idea of this is my trade. This is my visual on the trade. So SPX, I did this for the February 27th, right? I'll build out let me just build the trade out here. We're doing a long call butterfly. So we're going to go to 7140. So I buy the 7140. I sell the 7150. And then I buy the 65. There's my trade. Okay. So right now the trade says, well, yeah, if Chris wants to take the trade now, we can get 80 cents. I don't want 80 cents. I want $1.50. So I'm going to put the trade for $1.50, which brings this green section up a little bit. and it reduces the red section down to a risk of like 350. So I have a little bit less risk here and a little bit more profit here. My profit trap is still a $10 bonus. Okay. And the reason that's the upside is because of the debit spread. 71.40 and 71.50, that is a debit spread. And then I'm financing that trade with a 71.50 by 71.65 wider credit spread. So 10 wide debit spread, 15 wide credit spread. Net result is I can take that trade for a credit, right? But I am still calling the top. Chuck says option strat cost me $29.95. I mean, that's fine if you want to pay for it. I am not paying for it. I pay for enough other stuff. It's like, man, I just want to show the visuals of it. But if you use it, I'm sure it's great. Like you use it, you get your, chance of profit, you get all your other tools, and that's great. But I just do the quick visuals on it. So does that structure make sense? And the more I can encourage you to kind of build out your trades in here and play around with the risk graphs, the more you start thinking of every trade you take is an option trade. Every time you take a trade, you know where price has to be for you to make money or where risk is at, and like that is now trading with calculated bets all the time. So I can be wrong because I know that even if the price went to, let's say Trump says it's a great time to buy stocks and the market goes to 8,000. Well, I know that I'm wrong in this trade, but I'm going to lose $350. It can't be worse than what my defined risk trade is. So, I mean, I just, my evolution as a trader is like, I ran a currency fund that never used stop losses and we made anywhere between, 19 to 40% a year. But it was the most like stressful 24-hour market. I wouldn't make money for months on end and I just build through positions until I got paid. And it was frustrating and stressful. And then things like dynamically changed after 2015 and the broker game changed. And it's just, all this BS was happening behind the scenes with brokers closing down servers and messing up all my robots. And it's like, dude, it is just more frustrating to just have consistency and have like, stop bothering me. It's like all these brokers are like, we're going to restrict this. We're going to change this. Our margins are changing. It just drove me crazy. So I've been trading stocks longer, but like from 2007, 2008, trading currencies, 2000 trading stocks, introducing options, 2010, 2011 for me, like my little journey on options. I just started realizing that in 2015, 2016, I started trading options for income and never owning shares. It's like, I started to like it better. And by the time we got through COVID, I'm just like, options is just better. When you can see the options market explode in popularity and the SPX goes bottom to top, it's like, just follow something that wants to go up. Isn't it nice to know long-term that the S&P wants to go higher in the future versus a currency that could literally spend 20 years doing that? And guess what you have to do in that environment? You got to freaking trade it. And there's all sorts of noise and there's all sorts of stop hunts. There's all sorts of liquidity, blah, blah, blah. It's like, it is super, super trader only focused and it will run. It'll wear you down. If you're not using good equity management, gosh, like the Forex market will beat you up. So, I was fortunate that I ran a successful fund for a while, but it just became like more boring. And I'm not trying to get excited. I'm just saying it became like, it was like currencies are moving 20 to 50 points a day versus they were using, they were like 80 to 100, 150 to 200 points a day. And then in an entire year, you'd have like 1 month of volatility. And then the rest would just be, yep, it's back to 30, 40, 50 pips a day. So I found myself sitting on positions longer and longer and longer and getting less and less profit because I don't want to trade bigger necessarily. So anyway, it just became a lot easier to gravitate towards stocks and options. But I still run a currency side. I mean, I've got whatever, probably 10% or less of my portfolio is now in currencies, but I still trade them. I still like the market. It made me one of the technical traders I am today. I just think that the calculated bets in options, when you can remove the noise, right? Options, what do you trade? Price, time, volatility. I mean, is it nice to know that if I put a trade in where I just need price to stay below here, price can literally do this. And as long as it settles less than here, if it's less than this point, exactly at that point in time, I can make money. And that's all I'm calculating, right? And so there's just the ability to like take a trade, embrace the trade, and let price and time and volatility do what it needs to do. It's still a bet. It's still a risk, but I just think it's a lot easier to manage your emotions and manage your risk. So anyway, that's it. Microsoft finally moving up. All right, we'll see. There's options next week on Microsoft for earnings. They have earnings on Wednesday, I believe. Mag 7 is up today. All right, that's a decent push, 465. This is kind of right where we started. So I've got the spread on Microsoft. This is a newsbreakers trade. So the call side has like an 8-1, I believe, and the put side has like a 10-1. Right now I am up $20 and down $20. Yesterday I was up 75 and down 75. So it's kind of back to like, break even ish. What I'm looking for is, can we get to 490, 495 by this earnings print? The 28th, and then if I want to manage it on like the 29th or 30th, if I'm anywhere inside these windows, that could be a really, really good trade for low risk. So we'll see what it does. Yeah, we'll see. Yeah, mags in general are up. I mean, here's mags. That's a big recovery right off the 144 moving average. I wonder if this is, nope, it's not quite symmetry either. I was going high, low, lower, high, lower, low. We didn't hit symmetry. Interesting. Yeah, it's definitely moving, man. What is up with mags? Big tech stocks haven't been this cheap in months. These investors say it's time to buy. Okay, well, there you go. Buy the dip on large cap tech. So, I mean, on that note, like with mags up, I'm surprised that the overall market isn't much higher. I mean, like mags is up 1% and the S&P is up 0.1. Hmm. That's kind of suspicious. That's kind of suspicious to me, because this is massive market cap behind the Mag 7, and I can't believe this market's not up more. But I don't know. What's the overall, what's the heat map looking like today? Trueflation, just, I mean, inflation is just falling off a cliff, man. That's kind of impressive, I guess. Uh, let's see here. What was I going to look at? PCE, I think, comes out next week. Inflation. Oh, heat map. Uh, wow. Well, here you go. So I guess here's the power of Mag 7. We have 34% of stocks declining, or I'm sorry, 34% of stocks advancing and 63% of stocks declining, and yet we are slightly up on the day. So there's your power of Mag 7. I guess that's how the stock market looks flat today, despite 63% being down. That's usually a bearish day. So the only buoyancy to today's market, the resiliency, is all Mag 7. This is interesting. Especially if Mag 7 is going to stay, it's like, well, there's your baked in resiliency to the S&P. But if it's going to be like, pump on Mag 7 to then dump it again and rotate out of it, then you're going to want to see that broader market, which is going to be, you want to see like 65% advancing and 30-ish% declining. I mean, it's hard to get like a 70-30, right? I mean, in the 60s is good. 70 is a very strong bull day. Obviously, 70 to the downside is typically a red day. But Mag 7 kind of keeping the market buoyed today. Do you think SMH is all-time highs next week? I don't know. I mean, it could. I don't know why you're asking for its all-time highs when it's like, I mean, it busted through all-time highs back from December. It's like, this has been a great run in early January. Do you need it to, Gloria? Or Sean, sorry, do you need it to? Because if I was needing it to all-time highs after having this thing up for the year 9%, it's like, I mean, it can, but I also wouldn't mind. This is just me as a trader. It's like, would I like to see SMH pull back and find some support so we can buy another dip? Like, yeah, that's what I'd rather see. Would be, I mean, to me, it's like the structure is safe. Oh, you shorted. Oh, okay. I see. I mean, there's the structure. Look, I will say this. I do think the market is due for some sideways. I think the market's due for at least some chop, possibly a correction. I think February, March, and April is kind of a perfect time for that. And if the broader market is sideways or down, I would have a feeling SMH is going to be sideways or down as well. It's going to be hard to see the S&P down and SMH going to all time highs. So if you get so your short position is like, if it goes to a sideways or down mode in the S&P, then I'm sure SMH gets dragged with it because it's certainly it's more sensitive. This is going to be a much higher beta, right? Beta is at 1.73, so it's a much higher volatility than the beta of 1 is the S&P. I went deeper in the money. Can't hit an all-time high. Got it. But it's next week's expiration, so you have it out to the 30th. I mean, look, it is good, right? It's like inflation. Where'd it go? I mean, inflation falling off a cliff. Like, I think that's good because now if the Fed's going to focus on anything, it's like let's focus on the labor market. If inflation's coming down, I'd hope that helps bring down rates in some way, shape, or form. But the problem is we are not cutting and getting any benefit on the long end of the curve. We are only cutting on the short end, which makes it like crap. If you look at the 10-year yield right now, which is where most of your longer term borrowing costs are set, we have not seen better rates since the bottom in 2024, which absolutely sucks out there. Is it cheaper to, have debt? No. If you're buying a car, buying a house, refinancing anything, it is more expensive. We are literally 60 basis points higher. That is not good. And why? I mean, they call this bond vigilantes, but it's really not. It's like I think that we have 40 trillion in debt and global debt that's I don't know 200 trillion or something ridiculous like that. It's like anyone that wants to take on debt or hold treasuries, they are demanding higher premiums. So if Japanese flows are going to go back and repatriate to Japan, they want yield. Nobody wants to put money back in Japan at a negative carry trade. So, I mean, this is a very real story. It's just I don't know if it really blows out. The big changes to this is if we have aggressive rates of change. So if we see the 10-year yield moving like 50 to 100 basis points very aggressively, that will rock the boat in the bond market, and that will probably mess up liquidity a little bit. Things will get a little bit wilder. Obviously, it's easier to see prices falling, but that happened here, and that wasn't good. That happened here, that wasn't good. So I just think this market right now, it's like I would say this, it's not a huge red flag, but it is a stabilizer. If this becomes more volatile, then you're going to notice it in credit spreads. You're going to notice it in liquidity and bid-ask prices. You're going to notice it across the board. But like not much has improved from the borrowing sense. Our lowest rate post-COVID was back in 2024 before the Fed started to cut rates. When they started cutting, it has not been better. All they're doing is cutting from 2 years or less. If it's less than 2 year, you're seeing improvements in yields as far as like they're lower, right? But on the longer duration, 10-year, 15-year, 20-year, 30-year, they're going up. So what that is if you want to lock in, like that's good for yields. But as far as like refinancing debt, which is what this whole world has, lots of it, that's just not improving. So anyway, interesting. Sean says rolled a little gold into copper. I see. That was my best Jeff Goldblum impression. 49.62 on gold. It's wild, man. Oh my God. Silver cannot be stopped. It really is crazy, isn't it? I am glad I'm participating, but my gosh, I feel like I am so far behind. I'm not. I have to remember that I did just, grab like almost $250,000 in gold and silver last year, but it still feels like, well, I'm down like 80% from where I took my profit from silver. But anyway, I still have some exposure. It certainly could be a much bigger position, but at least I'm in. I've got skin in the game. I'm up 11 grand on gold and silver. I'm up another like couple $1,000 on gold. Nothing crazy. $1,000 on gold. PHYS is up $5,500. Silver's up $23,000. Like it's not bad, but I'd love some more exposure. This is just unbelievable, man. I'm confused on this Bitcoin versus banks when it comes to gold and silver. Bitcoin, yeah, I think Bitcoin is going through this like really interesting maturity phase where I think that it was the market's probably biggest alpha for the last maybe 5 years or so. Bitcoin has been, I mean, I don't know what the 5 year return is, but I'm sure averaging like, 40, 50+% a year over the last 5 years. And that includes your drawdowns. Okay. But with gold and silver ripping, I just think that people have really clung to the narrative that gold is the best place to be right now. You think the world is going to print more money? Check. Buy more gold. You think that we're going to have inflation? Buy more gold. You think that banks are hoarding gold and wanting more physical delivery of gold and silver? Buy more gold and silver. Do you think the fiat system is heading into a debt spiral at some point or some type? Buy more gold and silver, or gold mainly. But that narrative has just it's been fed so hard last year. And look, it's a broken chart. I mean, this looks great. This is exciting. I'm just telling you, like, this is not how this chart goes on forever. And it looks so tempting. I want to be in. I'd love to get this gain where, gold is up 27%, but silver is just up. I mean, I want to say we're up over 100% since this pullback in October. Silver is up 116%. You've got to be freaking kidding me. Like this is the best silvers like ever performed. Even with the crazy runs that we saw up, it's like this is an incredible run since the lows in 2020 to now. It's like, and this is hindsight crap, but from the COVID lows, silver's up 740%. One of the best performing assets in the last 5 years, easily. Now there's some stocks that are up thousands of percent because they were worth $1 and now they're up 100. That's not, but this is a metal, an industrial metal that is now just ripping like a meme stock. So as a trader that knows how this ends, like commodities don't just go up forever, and typically when they look parabolic, they will end in a glorious fashion. So, but the good thing is if you are bracing for taking some profit along the way, protecting some stop losses along the way, if and when this pulls back, we look at the opportunities to buy the dip and then hold this thing for a bigger long-term trade. And whether silver is my allocation or gold, I think gold is probably the better of the two at this point because of the outperformance. Our ratio is still, this is XAU, XAG. And this ratio is at 49. Historically speaking, when it's down to 40, 50, it's a better trade to be in gold. Could it get all the way down here? Maybe. But I at this point, I would rather be, if I'm in a position, I'd rather give my lean to gold. I'd rather be in more gold than silver. Because at some point, let's say that this is going to turn, gold is going to be the outperformer. Okay. So it is definitely a bit of a mania out there. It's exciting, but as a trader that would like to be in it some more, I'm just not chasing. So don't call the top, don't chase. I'd say just wait patiently. And that's a hard thing to do when this thing is just like mania, right? But one thing I will rest on is I've traded a long time, technicals matter, and this 600 plus bar count that we're creeping up on, this is the 615, 625 bar count level. At the end of March, I don't know how ugly this is, but if we see a 15 to 20% correction in gold, my gosh, that's going to be volatile. It's like this would be, let's say we have a 30 to 50% correction in silver. That happens. And the stock market, is it money leaving gold and silver going back into equities? Probably not. But I don't know. It's just I'm uncomfortable chasing this, so I won't. But it is frustrating to sit here and try to tell myself to be patient when it's like every day it's going up. Every day it's going up. If it wasn't for this bar count in gold, I would have no hesitation. I'm like, oh, I'll just dollar cost average. But because of this bar count, I'm like, we got to hit this 200-day moving average. So whether we pull back to here and chop around, or it just goes up in this glorious fashion only to correct. I mean, the correction is going to look either straight up, straight down, or it's going to be like those inverse cup and handles where it's going to be straight up, down, lower high, lower low, and we might have a 3 to 5 wave move. That's fine. I would measure symmetry. That's going to be the easiest trade. Measure symmetry, high, low, lower high, lower low. That's my first buy level. If we go lower high, lower low, that's my next buy level. I'm just going to measure symmetry, and then long term, I'm still going to hold for higher gold prices. So that's it. But it's like my ability to participate is going to have to require patience. And I hate it. I hate it right now. I don't want to be patient, but my money needs to be patient. There's no reason for me to chase this. Okay. So I think technically we be patient and we'll be rewarded for that. Hopefully. All right. Long oil just under 150. Yeah, that would not be good, right? Yeah. With GLD silver up so high, I'm not sure why VIX is down. I mean, VIX has nothing to do with gold and silver. VIX is an S&P related instrument. So VIX is down because S&P is drifting higher because you're led by Mag 7 today. This is up. VIX is down. It's an S&P instrument. Okay, it is weird. It is weird. But one thing I would see probably happening a lot in 2026 is going to be what we just saw this last week. You'll have these big flare-ups in volatility and then get smashed. So I would expect a lot of like 15 to 20s in 2026. We're going to have like a noisy, choppy market. Either we have like the best year, Goldilocks year, where volatility is just forcibly low, or we have like just a very noisy, messy, like 15 to 20, 15 to 20, 15 to 20. And it's going to be, it'll drive you crazy. But what does that mean? If we go 15 to 20 VIX, 15 to 20 VIX, we're probably going to see the stock market for the most part grind slightly higher, right? Because we're not getting a big flare up in VIX, which all of a sudden is where you get the big corrections. So if we cap the VIX at 20 this year, we'll probably see the market for the most part have a choppy but steady floor. You know, and maybe that's what happens. So gold and silver have nothing to do with the VIX. This is only an S&P related instrument. So your 30-day volatility in the S&P is your calculated VIX. Oh yeah, Don, I know. I mean, look, any major crash, it's like, yep, look at where that was until it wasn't. It's like, I get it. I mean, COVID, 2020, oil went to negative. That's never happened. It was one of the best trades coming out of 2020. You know, the futures market went to negative 30 cents. I mean, like I wish I was way longer oil than I was in 2020. I was long it, but not enough. I mean, I made, I don't know, I think I made like 10 grand on an oil trade when literally if I held it for 12 months, it could have been worth like 30 or $40,000. So, but it wasn't the only trade. It's like everything I bought in 2020 made money. It was like, felt like one of the easiest years I've ever traded, but it was like, yeah, just because you had the courage to participate in, you know, what you thought is the world really ending right now? No. So I looked left in the charts, found these massive discounts. I'm going to take a stab at things. Here's $1,000 at it, and it doubled. You know, here's a couple $1,000 at it, it doubled. It's like I had so many trades like that in 2020, it was insane. And if traders got accustomed to that, well, they were sorely disappointed in 2022 when nothing was up. Tim said we had 300 years of oil. Ugh. Yeah, I mean, I doubt that now. That I mean, I don't really subscribe to that stuff. It's like I don't think you know. I mean, if we really had to, let's say we ran out of oil, right? Do you know how fast the world would make alternatives? Like we have the technology to have like zero oil in our life, but if it's convenient, then we'll just keep tapping into it. So, but it's just crazy. Like it's so geopolitically motivated and manipulated. So it's just a trade. Like at the end of the day, all of this is a trade. You know, I mean, I love and respect Stanley Druckenmiller. The dude is one of my like hedge fund heroes. He is go all in on a basket and manage that basket, which I totally respect. But if Stanley Druckenmiller was wrong back in the 70s on oil, you wouldn't know who Stanley Druckenmiller is. right? If Warren Buffett was wrong on Coca-Cola, you wouldn't know who Warren Buffett is. Like they were all in on these trades and they got paid very well for it. And it's amazing. But it's a gutsy trade. And there's nothing wrong with that. But like, that's not how I trade. I don't want to have to be right, because if I'm wrong, it freaking sucks. Like if I'm all in on something I'm wrong, then what? I don't want to be that trader. So anyway, and those are two huge names in the the industry. Stanley Druckenmiller, certainly one of my favorites. He's even to this day, it's like he's managing like family office money and stuff. He's out of the hedge fund game, but my gosh, man, I mean, his career returns were incredible. Buffett, the goat. I think that Buffett became a much better investor with Munger. I think the two of them together were crazy good. And then Jim Simons is like your quant. He's an MIT MIT mathematician. Everything they did was quants and algos back in the 80s and 90s, and all they did was pattern trade. So like that type of stuff, like those dynamics are so impressive. But it's like there's ways to do it. At the end of the day, it's like you got to manage risk. If you have a all-in mentality and you're right, yeah, you can make a ton of money. If I was all in on Palantir, yeah, I'd have 5x my portfolio. But if Palantir went to zero, it's like I don't want to be not trading. Like this is how I look to manage my retirement. And to do that, if I can safely take trades that generate 10% a year, 15% a year, 20% a year, on a good year, 30, 40% a year, I'll be fine. But I should be able to stay in this game for as long as I need to. All right. Yeah. I know. We love leverage, man. So one thing to watch for, there's all sorts of like canaries in the coal mine right now, but I think we do have like a really interesting phase. Like we could have like this Goldilocks environment where the market does climb the wall of worry. Inflation looks like it's going down. That's probably encouraging. The labor market is a huge. I think that we literally changed how we pull in unemployment data. So I think it's going to show like, oh, unemployment rate is lower. I mean, we're still in this like low fire economy, but you're getting less and less W-2s and probably more and more 1099s. If you're going to automate out transportation at some point in the next 5 years, if you're going to start putting humanoids in factories and there's dark factories with zero human workers, that can't be great. But I do think at the same time, like this new economy with AI and whatever that goes with it, like this new economy should create opportunities somewhere. And we could have industries right now that we don't even know exist. So I'm hoping that if, in our country, if you want a job, you can have a job and you can hustle your way to some type of socioeconomic growth. The financial markets are here to take advantage of what they can be, which is a great wealth generator and a great preservation of wealth tool. So there's a reason it's hundreds of trillions of dollars wrapped up in the financial markets globally. It is a big deal. So, all right, I'll get off my soapbox for the day, I guess. What else? Let's see here. The pound, that was Soros, right? Yeah, Bank of England, Druckenmiller. Yeah. Soros, if he was wrong on the Bank of England, then you wouldn't know who George Soros was. But you do know who they are. So it's like I'm not gonna, say that, oh, they didn't know. It's like, of course they took a bet and they changed everything, which is super awesome. But I don't want to be on the like for every one Stanley Druckenmiller, there's probably hundreds and hundreds and hundreds of bankrupt or busted wannabe Druckenmillers. To be fair, just like you see every tweet that's like, if I get this call, I'm going to make $100,000. For every one of those, it's like, how many losses of millions of traders have you seen? Like nobody shows that stuff, So anyway, it's just where we're at. It's an interesting world. It's an interesting time. It's full of noise. At the end of the day, Ray Dalio, I think the guy's pressing his book tour a little bit harder than I'd like. He's definitely a doomsday guy now, which I don't like. But when he is talking, he does say, his mantra, I've said this before, like his mantra is pretty clear, and I wish everyone adopted this. That is, spend less than you make and be kind to people. I was like, yeah, like what's so hard about that? If we did that as if I if I did that as an individual, if I did that as a family, if we did that as a society, if we did that as a globe, it's like we probably have a little bit more prosperity. If we were kind to people, then it wouldn't feel so freaking divided and everyone's pissed all the time. That's what it feels like, but that's like all portrayed on media. You go out and talk to real people, it's not that bad. Everyone's pretty nice if you talk to them. You might disagree on stuff. You bring up Donald Trump, you'll see where people stand. Like him or hate him, it's like that's crazy. You bring up, it's like politics now are as sensitive to most people as religion or whatever the most offensive thing to them is. It's like it's crazy how politics have done that in the last 10, 20 years. But it's like if you just go talk to people, it's probably fine out there. Or you can be scared of everything. And it's like that's not the world I want to live in. I'm hoping that there's more to it than that. I'm hoping that there's like a golden rule exists out there for most people to get along, but I don't know. Maybe we take over Greenland and we start running the world, and it's like, okay, here we go. All right. Anyway, Blake, let's do this, dude. I'm gonna jump off here. For those that are sticking around, engineered options. If you'd like to get a stream, let's do it. Let's do a live stream for engineered options. I will get a video posted between 12:30 and 1 o'clock today. 12:30 1:30 because I'll be going on Stonk Mania with Lance. So I'll get a video update posted. Trades are looking pretty good. We're up a little bit today. We are creeping up. Now, remember, I talked about the market maker move this morning around that 69.40 zone. If you want to take a stab at it, I don't know if it's offering much right now. Just going to look at it. I don't love calling the top right there because the market could clearly melt up higher. But it wouldn't surprise me to still see the market respect it. So 69.40 right now. I mean, you can get $1.40 risking 360. It's like that's not a bad trade if we stay below it. If I went a little bit wider, I get 230 to risk 770. So, maybe moving my strikes a tiny bit, it's like, I don't know. I'm just going to let the market kind of do its thing. I still have my pending order right here, 55 by 65. If this is trading for over $1, I might still take the trade. I'm just not going to settle for less than $1 on a 10-wide trade. So if I don't get filled today, no big deal. Mag 7 is up. The rest of the market's down. That's an interesting kind of mix for the day. But coming into next week, it's all about Mag 7, which, by the way, today I'm thinking, I wonder if this Mag 7 stuff is a little bit of a pump up for the market next week to deal with some of the noise, right? We have Mag 7 earnings and we have the Fed next week on Wednesday. Plus, I believe we have PCE as well, which is kind of the Fed's primary inflation gauge. Debt per person, 115K. Yeah, it's true. And at the same time, isn't it like if you took the world's 0.1% of wealth, you could probably pay off everyone's debt and have, plenty of money to go around. You could solve world hunger. You could solve, yeah. The concentration of wealth is also nuts. I get it. Bought his stocks a couple weeks back. DJT up about 20%. Yeah. I mean, it became a meme stock. It's been pretty volatile. When is the fourth masterclass going to be posted? It should be posted. Is it not? Has it not been posted? For engineered options, we did that masterclass this week on, I think we did it Tuesday. If it's not posted, I'll make sure the team pulls it and gets it posted along with the updated notes. Since we added those rules for our, if we're in a good alignment, here's our plan. If we're in a, caution or bad alignment, here's our plan. I'll try to get that posted today. Okay. All right, Blake, let's fire up engineered options. I got to bounce. I've got an interview coming up here in about 23 minutes. So I'm going to brush up on some tariff talk and I'll post a video for engineered options before 1:30. I'll be on with Lance at 1:30 for Stonkomania and some engineered options. And that'll wrap up our week. So, all right. Talk soon, everybody. Thanks, Blake. Have a good rest of the day, everybody. See you soon. Okay. All right, we're good. Yeah, when you're ready, Blake, take it over, and I'll quietly exit I'll exit stage left.
Sounds good to me, man.
All right, thanks.
You're welcome. Thank you. I hope you have a good weekend, bro.
Yeah, you too.
Will do.